Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings before they make absolutely no sense at all. Today we are going to dive into a Form 8K filing by Principal Financial Group. And believe me, this one has a few financial twists and turns that will remind you of a roller coaster, except instead of screaming, you'll be scratching your head trying to figure out what's going on. So, what's the big news with Principal Financial Group? Basically, they've created a somewhat complicated structure involving the issuance of securities and an agreement that could give them access to $500 million. It's a move that could provide them with financial flexibility, but it also comes with a hefty price tag and a few strings attached. Let's break it down. On March 6, 2025, Principal Financial Group, through a special trust, sold what they call precapitalized trust securities, or PCAPs. Think of these PCAPs as a special kind of investment that raised them $500 million. However, these aren't your everyday securities. Only really big and qualified investors could buy them. The trust then took that money and invested it in U.S. Treasury securities, basically meaning the trust bought U.S. government debt. Now here's where it gets interesting. At the same time, Principal Financial entered into an agreement called a facility agreement. This agreement gives Principal Financial the right, but not the obligation, to sell senior notes to the trust later on. These senior notes are essentially debt that Principal Financial could issue. The maximum amount of these notes that could be sold to the trust is also $500 million. Think of this as Principal Financial having a line of credit, a way to get cash if they need it, by selling debt to this trust. It's like having a credit card with a really high limit, but instead of buying things, they're selling debt. These senior notes carry an interest rate of 5.807% and are due in 2055. When Principal Financial exercises this right to sell the senior notes to the trust gives them the U.S. Treasury securities it was holding. So Principal Financial gets cash and the trust gets Principal Financial's debt. However, Principal Financial also has the option to give cash instead of the debt. This is a way for them to buy back the senior notes plus accrued interest. For this right, Principal Financial pays a fee called the facility fee to the trust. This fee is 1.289% per year of the maximum amount of senior notes they could issue, even if they don't issue any. This means Principal Financial is paying around $6.4 million annually just for having the option to sell these notes. So it's a very expensive credit line, a luxury they are paying for. On top of that, Principal Financial is also covering the trust's expenses, including the trustees' fees. Think of it as covering all the costs of running this financial arrangement. Also, Principal Financial Services, Inc. is on the hook if Principal Financial can't follow through, guaranteeing the senior notes, facility agreement, and trust expense. The agreement also outlines specific scenarios where Principal Financial must use this right and issue the senior notes. For example, if they fail to pay the facility fee or if their financial health significantly declines, they're forced to sell the notes to the trust. It's like being forced to borrow money when you hit hard times. If their consolidated stockholders' equity dips below $4 billion, excluding a few items, they have to exercise this right. It's like a financial trigger, forcing them to borrow money to potentially shore up their finances. Principal Financial can buy back these senior notes at any time by giving the trust back the U.S. Treasury securities that match the value of the debt. This gives them flexibility to manage their debt and the arrangement. Principal Financial also has the option to redeem or buy back the senior notes before they are due in 2055. If they do this before August 15, 2054, they have to pay a premium, an extra amount on top of the principal. After that date, they only need to pay the principal amount plus any unpaid interest. It's like paying off a loan early. Sometimes there's a fee, sometimes there isn't. If Principal Financial buys back the senior notes, either by giving back the Treasury securities or with cash, the trust will then redeem a matching amount of PCAPs. Think of it as unwinding the initial transaction, closing the loop. The PCAPs will be redeemed or bought back on February 15, 2055 unless they are redeemed earlier. The trust may also end upon the occurrence of certain other events. So, what does all of this mean? Principal Financial has essentially created a financial structure that gives them access to $500 million if they need it. But this access comes at a cost, a yearly fee, and with some conditions. It's a way for them to have financial flexibility, but it's not free and it's not without its complexities. Now, let's zoom out and look at the bigger picture. Is this a good move for Principal Financial? That's the million-dollar question, or rather, the half-a-billion-dollar question. On the one hand, it provides financial flexibility. Having access to that much cash can be helpful in times of uncertainty or when pursuing new opportunities. On the other hand, it's expensive. The annual fee alone is a significant cost, and if they are forced to use the facility, they'll be taking on more debt. Also, it does add a layer of complexity to their financial structure. It might make it harder for investors to fully understand their financial position. While this looks complicated, it can be a lifeline if Principal Financial hits hard times. Ultimately, whether this is a smart move depends on how Principal Financial uses this financial tool. If they use it wisely and strategically, it could be a valuable asset. But if they are forced to use it due to financial difficulties, it could become a burden. Thanks for watching. If you found this breakdown helpful, please like, subscribe, and leave a comment below. Let me know what other corporate filings you would like me to decode.